Why is it that billionaires, people with more money than they could ever spend, rarely keep their wealth in savings accounts? You'd think they'd play it safe, right? Just park it in the bank and let it sit. But they don't. In fact, they avoid it like the flu. If that sounds backward to you, hit like and subscribe, because what you're about to hear will flip your entire view of safe money. Let's break it down. Most of us are taught to save. Put your money in the bank, earn interest, be responsible. And on paper, that sounds smart. But here's the paradox. The wealthier you get, the less sense it makes to park cash in savings accounts. Why? Because of something called inflation erosion. A savings account gives you maybe 1 to 4% interest, but inflation, that can easily hit 5, 6, or more, especially in today's world. That means every dollar you save is actually losing value over time. So while your balance looks safe, its buying power silently shrinks. And billionaires? They don't just count dollars. They calculate value. And value doesn't live in bank accounts. Here's the kicker. Billionaires know that money sitting still is money falling behind. They don't save, they allocate. Every dollar has a job. Some go into businesses, some into stocks, some into real estate, funds, or long-term assets. Not because they need more money, but because they understand the cost of doing nothing. Let's take Jeff Bezos. In 2022, Amazon stock dipped, but Bezos didn't panic and withdraw his cash. He stayed invested. Why? Because his money wasn't in a safe place. It was in a productive place. Or look at Elon Musk. His wealth isn't sitting in a Chase account. It's in Tesla stock, SpaceX equity. Volatile? Sure. But every dollar is working. Growing, building, compounding. Let's compare. If you leave $100,000 in a savings account at 2% annual interest, you'll have $121,899 in 10 years. But if inflation averages just 3.5%, your real value actually drops, even if the number goes up. Now imagine putting that $100,000 into a diversified index fund averaging 8% annual return. That grows to $215,893 in a decade. That's not theory. That's what wealthy people do every day. But it goes deeper. Billionaires understand that access to cheap debt is more valuable than hoarding cash. They borrow at 3%, to invest at 8%, 12%, or even more. That's not risky. It's strategic. They use leverage to grow wealth, while the rest of us hoard dollars that quietly rot in a savings account. So what does this mean for us? It doesn't mean you should pull all your money out of the bank today. You still need emergency savings. You still need liquidity for short-term goals. But it does mean we should think like investors, not just savers. Because savings accounts are designed to protect, not to grow. And long-term, that protection becomes a trap. Here's the paradox. The very thing that feels safe might be the most dangerous place for your future wealth. Think about it. How much have you lost, not in dollars, but in potential, by keeping money idle? How many chances to invest, build, or grow got delayed because it felt safer to wait? The goal isn't to avoid risk. It's to understand risk and choose smarter ones. Because doing nothing is also a risk, just a slower, quieter one. Have you ever looked at your bank statement and realized, this money hasn't moved, and neither have I? So, here's the big question. Are you keeping money safe or just stuck? Let me know in the comments. What's the biggest missed opportunity you've had because your money was sitting instead of moving? And if this made you rethink your idea of saving, share it with a friend who's always stockpiling cash but never investing it. Because true wealth doesn't sit, it works. And always remember, wisdom doesn't come from degrees. It comes from small daily decisions.